Edward, thank you so much for joining us here at
Pleasure.
the PLSA's investment conference. We've got Mr. Trump in the White House, we've got Brexit, we've got European elections on the horizon that could cause more instability. How on earth does this industry cope in that situation?
How you're supposed to plan is a very, very difficult question. I think you just have to get used to it. It's a cliche, but more levels of uncertainty. Try and focus on the longer term and don't get too swayed by some of these short-term things. I know it's very difficult in this world where we're all drowned in media, but try and fix on some sensible long-term planning and have the discipline to stick to it.
Is it quite hard to foster that in the current climate? Are people cautious about looking too long-term? They're cautious about the now, and is it hard to foster that in the industry?
Yeah, I think it's one of the big challenges, and I'll be talking later about short-term horizons and long-term horizons. And it's still a mystery to me, perhaps you can tell me, but one of the conundrums is in 1900, average longevity was about 40 years, 45 years. By 2000, the average man or woman could expect to live till about 85, 90. It's a doubling in lifespan in 100 years. And yet at the same time, we're thinking more and more shorter term, more and more, as you say, we're more nervous, more uncertain. The theory should be if you're living for longer, then you should have more confidence in the longer term and plan for longer. But it seems to be, I suspect technology is having a very key role in this, is making people more short term and more averse to loss in the widest sense. So people are getting more fearful. I don't have the answer. I suspect that is one of the factors of technology, and we're going to have to get our heads around it and slowly learn to deal with it.
Edward, you're going to be talking to the conference about long-termism. Explain to me what you mean by that and why it's difficult in this environment.
I think it's very hard about long-termism because I think human beings at the moment, because we're being deluged by all sorts of media, it's not just your fault, but the mobile phone, television, the internet, Twitter feeds, etc. Human beings I think that's making people feel more short-termist, more nervous, a bit more loss averse, less confident and less able to plan for the longer term. And I think it's a really difficult issue. It's affecting politics because people are looking for more simple solutions to complex things. It's affecting us in the asset management industry because people are expecting higher returns because that's what they need and want. And I think it's probable that we are in a lower return world. And so that's creating a pressure on the industry, and therefore the room for disappointment is going to go up. What we do about that is a very interesting thought experiment. I'm not actually sure what we do about it. I think it's an inevitable feature of modern life that people are a bit more insecure. I suspect it's this loss aversion. People actually, if you stand back, living standards in general in the West, the highest they've ever been. It's more peaceful. People are living longer at a better educational level, but people feel more nervous.
So Edward, in this environment, the long-term view is a hard one for practitioners to get across that it needs to be happening to consumers. How do the best people go about trying to do that in this environment?
I think it's quite hard to do. I think looking at proper diversification, by that I mean trying to ensure that your pension funds and institutional accounts are invested in a range of asset classes, managed where possible by definition in the top quartile practitioners. Some of it may be passive, there's nothing wrong with that, and some of it may be active. I suspect the longer term endowments, and I sit on a big charitable foundation, look at alternative asset classes and have a big proportion of their assets, meaningful proportion in unquoted investments, venture capital. They're prepared to accept illiquidity. And I think that's one response to the short-termism, is if you're investing for the long term, you should, if you like, embrace volatility or not be frightened by it, and look for illiquid asset classes that you can hold on behalf of your clients for the longer term.
This crazy environment could actually present opportunities.
It could present opportunities. I mean, one of the oddities of this environment is everyone's saying it's never been so uncertain, but volatility as measured by stock market volatility is actually at quite low levels with occasional spikes. Now that in itself might be dangerous, maybe that we're all a bit complacent. You asked about Trump and Brexit. At the moment, markets are taking a benign view. That might not continue.
But also from the consumer's point of view, they think that times are very tumultuous, but actually, as you say, the economics are showing that economically they're not so much, but it's just what the public are being exposed to in terms of what the media are saying.
And I think I can sort of understand it. The other side of the case is that if you look at the evidence, particularly in the States, long-term real median incomes, average incomes for the middle classes, working classes, actually haven't gone up for 15 to 20 years. And that's true in the UK for a shorter period of time. That breeds insecurity. Globalization, hence the theme, world trade, is making lots of people nervous about their jobs, and it's linked to the wages point. And that's part of the reaction of the Brexit vote and the election of Trump. And I think also significant, that I'm going to be talking about later, is technology. And people are rightfully worried, in my view, that on the one hand, technology offers all sorts of wonderful possibilities and better things at cheaper prices, or better experiences at cheaper prices. On the other hand, it might affect their livelihoods. There might be whole swathes of industries that are going to be replaced by machines or automatons.
What message do you hope the delegates listening to your presentation today take away?
Try not to raise your eyes to your point about the short term. Don't be too reliant on forecasts. Try and look over the medium and longer term if that's what your job is promoting, and that's what investment should be about. And try and be disciplined about not being buffeted by daily and weekly and monthly events. Politics is a fascinating and interesting subject of conversation. It's very, very difficult to put the impact into markets longer term. So try and look at some of these long-term themes like demographics, like technology, and like world trade.
And try and foster an embracing of that amongst the consumer, the long-term view.
Yeah, I think so. I think it's a much broader task than the conversation between an asset manager and the consumer. I think it affects us all as citizens and this role of technology. And I think we're just at the beginning of yet another revolutionary change. And we still really don't understand about how the human being in our brains, which are wired to respond to short-term incentives, should really think longer term.
None of us really like to think about being old, do we?
Well, no. I think we overvalue youth, because what did Oscar Wilde said? That youth is wasted on the young. It's a great quote. But we are all going to live longer, and the good news is mostly live in a better state. The issue is how we're going to pay for it, and what are the other conditions. As the rate of being killed by infectious diseases go down, it's being replaced by other conditions, such sadly as Alzheimer's and dementia. And that's the next medical challenge, is to understand the human brain such that we can still have a long and healthy life.
An awful lot of questions to be answered. Thank you so much for
Not
trying to address some of them today with us, Edward. Good to meet you.
Pleasure.